Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, November 12th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. It's for informational and discussion purposes only. Please do your own due diligence. It's your money, it's your responsibility. Okay, let's get into this week's slide deck. So this is a guy that I follow on Twitter. He does a lot of great work for free. He has a website. If you go and look up this guy on Twitter, there's a link to his website. But he does a lot of Twitter spaces where he analyzes various Canadian oil and gas. He's done like 3 and 4 hour presentations about supply and demand fundamentals in oil and gas. They're very educational. And so I would recommend that you follow this guy and check out his website if you're interested in understanding, getting into the minutia and the financials and the potential for. I mean, I think there was one presentation he did like a month ago. It was like 5 hours long, and they went over like 20 or 30 different companies. So pretty good information. So anyways, I wanted to point out this tweet this week. Against pipeline constraints and shale's heavy decline rates, Appalachia production has now dropped below 2019 levels. As you can see, 2022 is in the red, and well, I don't have the I had to cut off the different colors, but suffice to say, the assertion here is that as it goes on to say in the tweet, the days of unrestrained growth in both shale oil and shale gas are behind us, setting up for a new oil and gas regime going forward. Invest accordingly. So this is what we're seeing. Decline rates, as you know, in shale oil and gas are very high. And just as we've talked about before, the political zeitgeist towards oil and gas extraction. I mean, the president is still talking out of both sides of his mouth. Now that the election is over, I suspect that you'll see a lot less of that, and we look forward to see what the policy responses will be. You see that the oil prices are already starting to head higher. I don't know if that's just noise. We don't want to, say that we have a trend, 2 or 3 days after the midterms, but it was without a doubt that use of the SPR and releasing oil into the market was a strategy that the Biden administration had to, in their mind, keep oil prices down and pump prices. And I'm going to show you why in another slide. But this is one of the things that I've kind of have in my investment thesis around energy and oil and gas in particular, is that there just seems to be this idea that we can flip a switch and throw money at it and we can ramp up oil and gas. I mean, production in the United States. I'm not sure that that's correct for many reasons. A lot of the low-hanging fruit has already been gone through. And so I think that less prolific areas will have to be exploited, which cost more and require probably a higher price to make them viable. So we'll see. I don't know enough about it. Like I said, I'm a general investor. I'm not an expert on oil and gas extraction costs on various fields inside basins. I mean, I'm sure even across the Marcellus, which is in Appalachia, there's various areas that are more prolific or cheaper to drill and more, the production's better. I just don't know that. But what I do know from a generalist point of view, and which makes me bullish, is that, there's been insufficient investment, and that continues for many reasons that we've talked about in the past. And so I wanted to point this out. This is off stock charts. This is a chart of the oil services, VanEck Oil Services ETF. And what I would note here is the fact that, we dropped, over 90% from the highs in 2014 to the lows of the pandemic, when you could have purchased it for, probably almost down 95%. That's 5 bagged already since then. but I think there's tremendous opportunity still here. And now, as you may have noticed, I've been talking about, and in the newsletter, we've been talking about oil field services as being undervalued for probably over a year. And we have several positions there. It's a big weight in the portfolio because I feel like it's one of the last undervalued sectors in the energy market, along with a lot of we've had a lot of bull runs in a lot of the exploration and production companies, but oil field services really hasn't kept up. And this post-pandemic bounce is one thing, but as I pointed out maybe like 6 months ago, with the oil price where it's at, we should at least see the oil field services index almost probably 100, up in the 600s or 700 range, based on previous. There was a dot plot chart I saw that showed the oil price of, and then showing where the dot plots around where this has traded in the past, and we are substantially undervalued. And now I think that's changing. We're starting to see a lot more people in the Twitter sphere, FinTwit, generalist investors now recognizing that the underinvestment that's taken place, and you're starting to see people articulate this thesis, and it's starting to get promulgated and making its way out into the investment sphere. And so I suspect that, as I've said before, I feel like there will be this is a tremendous opportunity. We've seen a lot of the companies that we have in the portfolio come off the bottoms quite a bit. It's not every single company. Some companies are later stage as you work your way down, right? So initially what you're going to see in an oil price recovery is the E&Ps recover, companies that are increasing production into a rising oil and gas price. They immediately respond because their cash flows. And then you start working your way down the food chain, right? To drillers, to sand, fracking companies, suppliers of tools, equipment, pipe, all the way down back to seismic service providers. That you're starting to see it filter through that whole oil field services world, right? So it just percolates through and works its way down the food chain. So we're seeing that. A lot of the companies that I follow seem to be acknowledging, or at least saying, that the prospects going forward, at least for the next several quarters, they're very optimistic. It's all incumbent upon the oil price, right? If the oil price stays, $80 plus, you're going to see continued benefit. Now, the thing that makes this, a lot of people would say, well, so what? They're not spending like they did in previous cycles. They being exploration production companies, oil companies, right? But as I should reiterate, it doesn't matter, because these services that are available are not the same that they were in previous cycles. This was probably one of the worst, if not the worst, depression in this business. Many of these companies went away. Many of them had to reorganize in bankruptcy. They've shed unprofitable equipment, old equipment. Many people left the industry. And so the industry that's left there to provide service is not the same size as it was in the past. And so I think you don't have to throw the same amount of dollars as in previous cycles to get outperformance. And I think that's what you're going to see. And I do think that, longer term, when I say longer term, this decade, if you will, we're in a definite energy crisis. I have a view. I cannot prove it, obviously, but I have a view that, like, a country like Saudi Arabia doesn't have the ability to produce that it had in the past. I think it's reached its peak. And many other countries in OPEC may have reached their peaks. And there seems to just be this view that all you have to do is throw money at it and it will self-correct. I don't necessarily share that view. I share the view that, that these fields are old. They've been producing for many, many decades. And at some point, every well, every area, every field, every country that produces oil eventually reaches a peak and then goes into terminal decline. And there's no amount of money you can throw at. You can extract more efficiently by using using water floods, CO2 floods, all these different things to slow the decline, to extract more of the remaining oil in place, but you cannot reverse the decline once it's been reached. It's relentless. And so do I think that Saudi Arabia would come out and say, oh, we've reached our peak and we're in terminal decline? Absolutely not. That would take away from their power and their ability to influence the oil market. So they're not going to say that. But, around the edges of them, cutting oil production or cutting the quotas, where are you seeing the growth, right? You're seeing growth in like offshore Guyana, right? Where Exxon's having tremendous results. You're seeing offshore West Africa, right? Namibia, places like that, where one of the portfolio companies we had one of the largest finds recently. In places like this, off the wall places, right? And so it's going to require, a higher oil price to stimulate activity. And I think that's what we're lining up to see. And then when you put that against that spending, that level of spending that you need against an industry that has, has shrunk massively from previous cycles, then I think that sets up for a tremendous returns. And I think that's what we're going to see. And I think as, we've made a recent new high here, this thing is very volatile, as you can see. This thing swings up and down based on the oil price. But if you listen to, like I said, if you listen to many of the conference calls recently, most, if not all of the managements were either very, very optimistic, depending on who you were listening to, or at least, depending on where they are in the food chain and based on the activity they're seeing and the interest and the, prospects going forward. So I think this is still a tremendous, like we've been on this for a year, and I just, it's another example of finding a sector that had an inevitability to turn and getting there before everybody else. Now people are starting to come to where the puck is, right? So we're starting to see that. So anyway, that's my view, and I think this continues. Again, be prepared for the volatility that'll be inherent in a lot of these companies. Are not that big. They swing around based on the oil price. Here's another reason why, you're having problems expanding production and services. It says hiring in oil fields, oil and gas unemployment rate is lowest since 2005. And here you go, right? It says U.S. shale unemployment rate tumbles to match lowest since 2005. So again, you don't have the people. That's an unemployment rate of 0.8%. That's crazy, right? You see at the top of the pandemic, the unemployment rate was almost 20% in this industry, and you see what's happening. So what happens is now all the experienced hands have come back, and if you need to if you want to create another frac crew, well, then you have to bring guys over, for experienced guys. You have to buy the equipment, which is, do you want to make this investment? You have to pay guys to come out there, and oil field service work is very, very hard work. If you watch some of the videos when frac crews are working, I mean, these guys work sometimes 2 days straight. There's no like work rules out there. Yes, they try to be as safe as they can, but time is money, and these guys, setting up the spreads, operating it, breaking it down, going to the next job. There's a lot of intense work. They take a lot of pride in the fact that they can get the job done, whatever it takes to get the job done. And a lot of people are not like tuned up for that kind of work. There's a tremendous opportunity. Like I see a lot of people, I know quite a few people that work in the oil field on this thing. They make a lot of money, but it's not an easy life, and it's not appealing to people that have a certain view on working. I mean, you're going to work with your hands, and it's kind of self-selecting, right? If you go out there and you're kind of a punk, or you can't hack it, they'll run you off. I mean, they don't care about your feelings. They don't care about anything. What they're about is, are you squared away? Can you get the work done? And do you turn to? That's what it's about. And you're going to get paid, and then you're going to be part of the in group. If you're just out there lollygagging and playing around, they're going to throw your butt off the job site, and they don't care. And it ain't going to be like done nicely. It's just like, get out of here, hand. You're done. And and you're going to. That's how it is out there. So that's why I think this isn't just going to go away if you just raise salaries, because it attracts a certain kind of person that can do that kind of work and can put up with the hardships that are out there. So this is another impediment to just, getting this big, new push of new oil and gas, right? The people aren't available. I wanted to talk about this. We saw recently the recent inflation report. I'm not going to get into the macroeconomics. We kind of maybe are seeing now the CPI come in lower. It looks like, these crushing, they're not really super high interest rates based on historical relativism, but for this over-indebted economy, they are high enough. And here's what you're starting to see, right? High interest rates are biting very hard. Here's just like, I'm not going to go through all the colors, but these are the net percent of domestic banks reporting stronger demand for jumbo mortgage loans, down 81%. Net percent of domestic banks reporting stronger demand for non-jumbo mortgage loans, down 79%. I mean, you'd have basically down almost, these are records. This is worse than 2008 because it simply is unaffordable. This financialized economy we have is very sensitive to interest rates. And now the Fed overindulged the economy with low rates, created all these made up businesses, all of this asset appreciation, speculation, and now it's unwinding. And, so we're going to see pain in a lot of these sectors. I think the only thing that's positive here, which is not really positive, the only thing that showed positive growth was net percent of domestic banks reporting stronger demand for credit card loans. That's because as people become crunched on their income, they're resorting to credit cards to live. You see people in the I use credit card to get airline points for everything, but I pay off my credit card balances every month. I mean, a lot of these people are, they don't even, I had somebody tell me this one time, it's true. A lot of these people don't even, they're buying things on credit and they don't have they're making minimum payments. They don't even own the underwear they're wearing. And it's not funny. It's not something to be, laughed at. It shows you how dysfunctional our economy really is. Now, this is beyond my scope of, discussing in these weekly videos. I just like to point out these vignettes. Housing is one of the main drivers of our economy, and it's completely basically the slam the door shut. Now, I see a lot of houses still being built here and around Houston area where I live, apartment buildings going up, but most of these probably may have been financed well before in advance. Plus, we have a big segment of the energy economy here, so people are cash flush if you're in the energy industry. But I have also seen, as I said before, as the perusals I do and starting to see the price cuts on these overpriced properties. So this is something to watch. I think that, you saw with the inflation situation may be rolling over. It was inevitable that it would. Not saying we're going back to 2% inflation, but you already saw, I think I saw one of the Fed governors saying that it may be time to pause and see, what is, if the increases in interest rates have been sufficient to get them, let's see what's going to happen. So at some point, and we saw, commodities rip over the last couple of days because of this, right? We also another reason, which we'll get into, which is China, but we'll get into that in a minute. But this is going to basically all in our financialized economy, which is over indebted and reliant on debt. We're starting to see the effect of interest rates being even historically not that high, but high enough to basically, come in like a wrecking ball in this financialized economy. And so at some point, the pivot's coming. And, I think that I think things are going to rip. I mean, copper's at 370 a pound, guys. And, we're supposed to be heading for a recession. I mean, Brent's over 90, I think 5 today. So, I mean, that's telling you that there's a supply issue out there. And what happens when the world is has to pivot and start, going back to QE again. I mean, these things are going to rip. So anyway, that's my view. But this is showing you that mortgage demand for mortgages is loans is worse than during the housing crisis. Not good. Here's another indicator, right? Used car prices, you're down to 2008 levels, right? They continue to crash. These used car prices are like 4.5 or 5% of the CPI. So, I've been talking about this off and on too. And you see, this is the Manheim used vehicle value index year over year. You see what happened during the pandemic when production was shut down, all the prices went up. That's when you should have sold your car if you were wanting to do that. And now you've seen what's happened as rates have went up. People can't qualify. I had the vignette or the slide last week where showed that the percentage of people in the U.S. state by state who had car payments over $1,000 a month. That was crazy. And there were places like Texas where over 20% of the people have a car note that's 20% or that's over $1,000 a month. That's out of this world. And so what happens is they can't afford it, or they get laid off, or they got into themselves into something they can't pay for, and then they end up forfeiting it. And this is what happens. Or people can't afford cars, or people are waiting now. When this is another thing that happens. I'm in the market for a certain vehicle, and I know a lot of other people I've seen have said the same thing. But now that they know that prices are coming down, why not just wait? Okay, maybe they'll go down even further. So that would be something to pay attention to. Just hold off buying to get an even better deal. But in many cases, they can't find the vehicle that they want, or the price hasn't come down still sufficiently. So we'll see. But this is it's another reason why things are rolling over as far as CPI. All right, so I wanted to get into this talking about energy. I think energy is probably the most important thing. I mean, I heard some other folks talk about this, like what are some other undervalued sectors? Where could we go? Is this played out? But I think this is your major dominant theme, as I've said before, for at least the next 3 to 5 years and possibly for the rest of the decade, is the lack of available energy. I was listening to Macro Voices, and what's the guy's name that runs it? Eric something. I can't remember his last name. But anyways, he's positing something he says to when he's talking to a lot of his guests is the fact that his view is, and he's an oil trader by trade, or energy trader, and he interviews all these guests about different macroeconomic situations. Pretty good guests. And one of the things that this Eric guy says is, Eric Townsend is his name. Anyways, he says that his view is that the amount of energy available because of the underinvestment and some of the other things that we've talked about also is such that even the economy won't be able to fully recover because the energy there's not sufficient cheap enough energy. That as soon as you start to recover the economy, the energy prices are going to increase, and then put a wet blanket on any recovery. I think that's a good point. I think it's possibly the point to focus on. As I just said earlier in this conversation we were having here, so-called Europe is in a recession. China with its self-inflicted COVID pandemic policies. Most countries raising rates around the world trying to deal with this inflation. And yet the main problem is this insufficient energy. And so as you raise rates, if you're a company wanting to expand production, now you have to go, if you want to borrow money, you're having to borrow at higher rates. So you see, it's almost like a circular firing squad. And again, like I think, or I have a view that several of the OPEC countries can't necessarily raise production. Like I said, they're not going to admit that. Eventually, I think that will become acknowledged. And so Eric Townsend's view that you can't really have a real recovery because every time that you try to go out and stimulate or try to have an economic recovery, energy prices will rise sufficient to stifle that. And I think that that's a good possibility. So anyways, Saudi oil chief says OPEC Plus will stay cautious on production. So even with oil prices on Brent at 95, you saw that they, recently what they did at the last meeting, they're having another meeting on December 4th. What are they really going to do? What can they do is the question. Will they raise production, or do they think this is a good sweet spot where, 85, 90, up to $100 a barrel is a good price? I don't think they have the same ability to affect oil prices as they had in the past of just turning the taps on, because we know for a fact that the spare capacity isn't there that used to be there. So anyways, it says Saudi Arabia's energy minister said OPEC Plus will remain cautious on oil production weeks after the group angered the U.S. by lowering output. The 23-nation alliance led by Riyadh and Russia is set to meet on December 4th to decide whether to cut production again, keep it stable, or reverse course and pump more. Members are looking at the state of the global economy and seeing plenty of uncertainties. Our theme is being cautious, the minister said to Bloomberg TV at the COP27 climate summit in Egypt. It's about being responsible and not losing sight of what the market requires. So this ties into my whole, another slide that we'll talk about later around the politics of this. But regardless, I don't see them just reversing course a month later and starting to announce, production increases. I don't see that. Probably they stay the course. Why not? The prices are where they need to be. And, we have a lot of other things coming into the market, with these EU sanctions that are going to take place on oil imports from Russia, which I think go into effect in December, and then the product imports from Russia that go into effect in February. So why do anything right now? Just wait. And of course, this will probably anger the administration or anger people in Europe, but what can they do about it? Okay, they can't do anything about it. And we've seen that already. So I expect that probably they'll just maintain the status quo and see how things shake out over the next couple of months with all these sanctions and things like that. And it may just do the work for them where the price goes up. And they can just point back at Europe and say, well, listen, we have the ability to produce more oil, but you're the ones that have put these sanctions on one of the largest oil producers in the world. What do you want us to do? We don't, and then it becomes a question of well, you don't have the real spare capacity that you suggested you had. Speaking to Saudi Arabia. So this is another thing. I was listening to Louis Gave. He's been talking about this. Some other people have been talking about, China cannot afford, now that Xi has his Emperor for Life deal going, Xi Jinping, the reversal of the pandemic zero COVID policy in China seems to be, loosening. Let's put it that way, because several factors. I mean, first of all, politically, I think it will happen like Louis Gave said. It'll be by a committee. They'll be slowly. It won't be Xi Jinping getting up there and saying it, because if there's some blowback, if they open up and then a bunch of people and 1 million people die of COVID, then it won't blow back on him. But there'll be these slow incremental changes moving towards lowering and removing the restrictions, because first of all, the economy in China is a total mess. Okay. And this isn't helpful to it. But they want to do it, they put so much of their prestige and personal prestige, if you will, it's hard to reverse a decision, right? That you've invested so much politically and personally into, which a lot of the like Xi Jinping did. And so I think that they'll slowly, it won't be just like snap their fingers and lift all the restrictions. You're going to see this slow incremental, because they still, even when they lowered some of these restrictions, they still had some outbreaks that they were dealing with in one of the major cities there. I can't remember off the top of my head. Regardless, I think we're moving in the right direction here. And this is not negative for oil prices, which we'll talk about in a minute. It says China eases some COVID restrictions. I will put as many links to these articles that I can in the show notes if you want to peruse them, if they're not blocked by a paywall. And you can read it for yourself if you'd like. But anyways, from the article, China has reportedly made long-awaited changes to its COVID-19 policies for inbound travelers, according to the media reports based on a statement from the country's National Health Commission on Friday. Quarantine time for visitors has been cut to 5 days from 7, with 3 days of home isolation. Bloomberg and the South China Morning Post reported, and those entering the country need only proof of one negative PCR test made 48 hours before flying. So you're starting to see these loosening of restrictions, even though you still got to quarantine. China leaders had promised Thursday to ease the zero COVID strategy that has caused economic upheaval. However, crackdowns were seen elsewhere, with soaring cases causing fresh restrictions in Beijing, which closed parks, switched schools to offline, and closed some shops, and 5 million under lockdown in the southern manufacturing hub of Guangzhou and the western megacity Chongqing, AP reported. So you see, it's kind of fit and starts here, but I think we're going in that direction. China doesn't have a choice. They got to get out of this. I think economically, it's not something you can just stay in forever. I mean, at this point, it's something that's endemic and is going to be with us forever. It's just going to be, as I said before, in my view, one of the 150 to 200 circulating upper respiratory viruses that the world has out there, whether it's RSV, influenza, other coronaviruses that are out there. I mean, there's a whole plethora of upper respiratory viruses that circulate. And so I think this one will become endemic without getting into conspiracy theories, and people are just going to have to deal with it. And that's just the way it is. That's life on Earth for humans since they've been around. So we'll see. But I think this is important because if you move even over the next like 6 months or a year towards full opening, what does that do to oil demand? I mean, some people have speculated that with these lockdowns, China's oil demand is 2 million to 2.5 million barrels less than it normally would be. You couple that with the ending of the SPR releases, which were averaging around 1 million barrels a day. And now you have to come up with 3.5 million barrels of oil, not to mention the decline rates that are happening every year of 6 to 7% worldwide, not to mention the fact that the gas to oil switching that's happening in some areas, and just the natural growth of oil demand as eventually, the world comes out of this, recession. So again, Eric Townsend's view may be the correct view, that you just do not have the energy available to sustain any economic recoveries. We will see. But again, this is another thing that we were looking for to on our thesis about oil prices going higher over the next several years. Throw into that the the view that you're going to see Russian production going down because of the inability to invest or the inability to have access to the world's best oil field services companies. And so inevitably, how much is that going to be over the next year or two? Is that going to be 1 million barrels a day, 800,000 barrels a day? Who knows, right? What kind of damage happens to their wells if they have to shut in wells because they can't replace other customers with the Europeans that are supposedly going to, implement these bans? So there's a lot of plates in the air, but they all, to me, seem bullish for oil. So I wanted to point this out. This was I get these emails from Bloomberg every day that summarize the news, but they had this chart, and they have like a chart of the day. So popularity versus the pump price. The blue line showing the president's approval rating, and then you see the gasoline price here, and you can see when gasoline spiked this summer, you saw, over time, as the gasoline prices have went up into the summer, the popularity went down. Now, I don't think that's the only reason, but it didn't help. And then you saw, when they started really pushing the SPR releases and tried to drive down the oil price, which I think that, with the economic deterioration around the world, coupled with, these million barrels a day that they were basically putting into the world market. Remember, all these commodities are priced at the margin. You saw his poll numbers improving, off the summer bottoms, but we will see now that the election is over, what will happen. I mean, you cannot just keep removing oil from the SPR forever. Will they continue to do that? Will they slowly wean themselves off that? And will we see, oil prices react now? I think some people on Twitter were saying, the oil price jump in the last couple of days is, people front running, the end of these SPR releases. So we will see. But this is what Bubis concentrates on. I talked about this before. Bubis Americanus doesn't really have a grasp of the real issues of what's going on. No one's voting. It's everything's emotional, right? Everything's an emotional response, or like, an insect with whatever, pheromones hit their antennae, and they just process this information at the basic level. Oil prices high, Biden's fault. Well, it's a little bit more complicated than that. But, this is, people that are aspiring to rule over you know this too. So got to keep the hoi polloi happy, right? And if you're paying, if people, if they would not have released these, had these SPR releases, it's quite, you could make the argument that oil would be well over $100 a barrel and gasoline would be $6-7 a gallon all over the place, and that would have probably been a negative effect, or at least they thought that would be in these recent midterms. But like I said, we have a lot of now tailwinds behind the oil price going forward, and the removal of the SPR releases is one of them. So we'll see what happens to Mr. Biden's approval rating. He's talking about running for president in 2024. So we'll see. But I thought this was interesting because it kind of illustrates, how Bubis reacts to gasoline prices, gasoline and food prices. Of course, that's about the extent of the depth of the policy that the average person reflects on before going and casting their vote. And so I wanted to talk about this because it's going to lead into another conversation real quick that I wanted to have on the subsequent slides. But I talked about this at the periphery. Many countries, the EU's patting themselves on the back, and if you read the Western media, they've solved the energy problem. Don't worry, everything's fine. But they did it by basically having all this LNG be paying these extraordinary prices and outbidding these other countries for these available LNG cargoes. There is not sufficient LNG for everybody in the world. And so what the Europeans did was, because they're wealthier, they just basically outbid everybody else. And so everybody, all the LNG went there. And so because no one actually analyzes things deeply and just reads headlines, then the view can be made that, well, they've solved the problem. It's not that big of a deal. But the problem is other problems exist, right? For countries that can't that are outbid. And here's Pakistan, for example. How the European energy crisis is reverberating around the world. And we've talked about this before on this channel for months. Pakistan will ration this winter gas supply to households. 3 hours of supply in the morning, 2 in the afternoon, and 3 in the evening. No supply the rest of the 16 hours of the day. Okay, so if you're a policymaker in Pakistan, or if you're running for office there, are you going to this is something you can run on? And as we see this shift to the multipolar world that I've been talking about, and many people smarter than me have been talking about for longer than I've talked about it, what do you think Pakistan's going to drift to? The US and the EU, or maybe to the BRIC countries and the Shanghai Cooperative and making a deal with Russia or whatever? I think that's what you're going to start seeing, folks. And it's not just Pakistan, other countries, right, that are getting, frozen out, if you will, because the EU has the ability to print money and just outbid people for these cargoes. And this is what ends up happening to other countries that can't compete, with that type of, bidding process. They just get outbid for limited cargoes. So, people in Pakistan are not going to blame, they're going to be looking to look somewhere else. And this opens an opportunity for the other sides in the multipolar world that we're moving to use this as an opportunity to woo other members in, and to say, look, you're being treated unfairly by the Europeans. They're outbidding you. You can't compete. But here's what we'll do, because, we're going to establish a long-term contract with you at a reasonable price where we benefit and you benefit. And don't think that people won't do that. Don't think that Russia won't do that. They certainly will. And that's, you know, and then what do you do? Yes, people want to make money, but trying to, because we're in World War III between the, Atlanticists and the Europeans and there's, Atlanticists and their stooges in the EU against everybody else around the world, basically, as this hegemon begins to crumble, this is what you're going to see. More news like this. And then this is an opportunity for the other players in the multipolar wrestling match to move in and use energy as a political tool to onside other countries. You're just going to see more of this, in my view. Is it actionable? Yes, it's actionable. Get out of the West. Do not invest in the West. It's in decline. So this came out of COP27 talks. Africa will develop their fossil fuels. Again, here we go, right? I mean, it's about energy security and the fact that, energy is needed for development. And if you're just going to tell developing countries or emerging markets that have very, very poor populations that, hey, you just need to, worry about climate change, they don't care about climate change. People are still burning, cattle dung and wood and charcoal to cook their food in Africa. No, the people that are running those countries are not going to be open to thinking they can solve the problem with solar panels and wind farms. I'm sorry, it's not going to happen. African nations must be allowed to develop fossil fuel resources to help lift up their people out of poverty, government said at the COP27 climate talks in Egypt, which welcomed leaders of oil and gas companies sidelined at previous talks. As a matter of fact, I think I read in one of the articles, it's over 627 representatives of fossil fuel companies at this conference. Pressure to leave hydrocarbons in the ground has been weakened this year by the disruption following Russia's invasion of Ukraine that led to a surge in energy prices and pushed inflation to multi-decade highs. I want to deal with this particular canard. Energy prices were already moving higher before this war started. This just threw gasoline on the fire, if you will, and made things worse. Okay, but we were already heading for an energy crisis. That has been well established. So this particular canard needs to be, disavowed. Another blurb from the article, quote, there is a lot of oil and gas companies present at COP because Africa wants to send a message that we are going to develop all of our energy resources for the benefit of our people because our issue is energy poverty. Their issue is energy poverty, not CO2 emissions or what might happen in 50 or 100 years. Could happen, might happen. We don't know. We can't predict the weather next week, but we know it's going to happen in 100 years. This is from Namibia's Petroleum Commissioner, Maggie Shino, who works within the country's Ministry of Energy and Mines. And I've heard this before from other governments, personally from government officials in countries that have extensive fossil fuels resources. This exact same message directly to me. I have had this conversation, not with like the energy minister of a country, but lower level officials. Let me say this again. There is a lot of oil and gas companies present at COP because Africa wants to send a message that we are going to develop all of our energy resources for the benefit of our people because our issue is energy poverty. So you see, this is what's going to happen, whether people in Europe or the US like it or not. And so this is, again, more part of the breaking apart of the unipolar world. People, you require energy to develop. You require energy to make your country more prosperous. You require energy for people to move up in wealth. Why should these people sideline themselves because a bunch of mentally addled people in the West have this belief that a trace gas is going to destroy the earth? They're not going to do it. Okay, it's that simple. And so is it actionable? Yes, they're going to develop this. Oil field services, they're going to drill. They're going to partner with companies. Okay, and there's nothing anybody in the West can do about it. That's just that simple. And if they try to, then these people will move to the eastern side of the multipolar world where countries will help them finance and develop their resources, i.e. China, i.e. Russia, i.e. India. I can go on and on. That's what's happening. Okay. Are you seeing what's starting to happen? Do you get the big picture? We have one section of the world that seems to be in its ascendancy, and another section of the world that dominated the world for the last 100 or 200 years, however you want to characterize it, in descending. Okay. So pick your side. So here we go is another article. I'll post the article. You can read about it, but um, this is what I'm talking about, folks. This is what's happening. This is the trend. The trend is your friend. What's the trend? Your Western countries, the United States, Europe, the UK, and the little vassal states here, Australia, New Zealand, and Canada, which just, ride on the coattails. The rest of the world, 12 more countries want to join BRICS. Why do they want to do that? Well, you can read the article. We've been talking about this. Is it actionable? Yes, it's actionable. Okay. You need to be thinking about these areas here in Central Asia. Okay. Uh, look the domination with 11 or 12 time zones and the $75 trillion worth of resources here that are going to be fed into these areas, okay, for manufacturing. Okay. The fact that if you go and see, I was thinking it was funny, like in Mali or one of these countries, Niger, they basically kicked the French out. The French Foreign Legion had to leave because they had these insurgencies, and you have Russians there now, part of the Wagner group and some other people waving Russian flags. Are you starting to figure out what's happening? The alignments the are happening, and as I've said before, no one has a fear or trepidation of the U.S. anymore because they see it as the weak paper tiger that it is. Okay, and that's why this thing in Ukraine is way bigger than just having to do with two breakaway republics in the East. Okay, you even had Jens Stoltenberg and other people in the EU and in NATO say NATO has to be victorious in this or perceived to come out ahead, or it could be the end of the alliance. Okay. But you see on the other side what's happening. And you could say, well, Iran, who cares? Saudi Arabia. I mean, Saudi Arabia wanting to join the BRICS. This stuff's going to happen over the next year or 2 years. Okay. And there's going to be more countries because they're going to see it as this view that countries have allies and they just do. No, countries have, they don't have allies, they have interests. And if it's in your interest politically, if it's in the interest of your country's development, if it's in the interest of overall weighing of the scales, then you're going to move and do what's beneficial. And so the United States is running around the world now because we have weak leadership here, weak, spent, no octogenarian working out of the post-World War II handbook, neoliberalism doesn't work. And people are casting it off. And they realize that they can cast it off and there'll be no repercussions. What, you're going to send Tony Blinken over to my capital and complain? Well, listen politely or not so politely, like in India, and then you'll leave. What are you going to do? Overthrow every government in all 12 of these countries that want to join BRICS? How? And so it's not going to happen. And so is it actionable? Yes, this is a long process. It's not something that will happen in a week or two or a month or two. This is a process that's going to happen over the next years and decades. Okay. And so what the United States should do is realize, this is the problem. I think this map shows you everything you need to know. When I talk about the McKinnon situation, where the vision is to have a common economic bloc stretching from Lisbon, Portugal to Vladivostok, do you get it? Do you get it? Do you understand what I'm talking about? Do you understand what the Belt and Road is, which is to bring manufactured goods through Central Asia into Europe? Okay, utilizing the ubiquitous, cheap, and available resources that are available in Russia and Kazakhstan and Iran and all these places to fuel that. And then what's the United States do? They're over here across the Atlantic. What are we supposed to do? We're froze out of this. This is what this is about, okay, in my view. And if you're not picking up on the vibe, look what's happening in Latin America, okay? Look, we're going to see more and more of these countries get filled in. And so where is the power going to be? Is it going to be in the East? Or is it going to be in the United States and Great Britain trying to run everything with a leadership that is spent with indebtedness now going 31 trillion, heading to 35 trillion by the end of the Biden administration? And it's not Biden's fault. This is set in stone. It's not going to change. And so, what are you going to do? You're in decline. Hundreds of trillions of dollars of debt and unfunded liabilities. No new fresh ideas. The fresh ideas and faces you get are totally off the wall, like people like AOC. They don't have a clue what's going on. And so you're going to see, I've said this prediction before. I don't see the United States being an intact political entity in 20 years or less. It's just not sustainable. Same thing with the EU. It's going to break apart. And so alliances are going to be formed. People's self-interest is going to dominate. Okay. It's inconceivable for most people because recency bias, they don't have the intellect, they don't understand history, they don't get it. But this is what's happening. You're living in historical times. This is going to create tremendous opportunities for people that actually know what's going on and have figured out what's going on, in my view. So we'll see, but I think that this is a trend that you need to follow, whether you agree with me or not. Again, here we go. 2000, here's the world, and here's the trading partners. Most of the world had as their biggest trading partner the United States, okay? And the red was countries that had their biggest trading partner being China. Now look at 2020. So do you see what's happening? Do you see why we demonize China? Why we demonize Russia? Do you get it? It has nothing to do with democracy. Please do not tell me that that's what. If you're on that vibe, you're playing checkers, man. You don't get it. You can't even play. You're playing Uno, man. You're not understanding global strategy. Okay, you don't understand what's been going on in the world for 200 years. Okay, this is what the United States is afraid of. And so they only react the only way they know how to, by threatening. What they should do is realize their new place in the world, that's going to be a multipolar world, and then put policies in place to try to, enhance our ability. Not going around, how much money and time did we waste in Afghanistan, in Iraq, okay, to over trillions of dollars that we did not have. Again, you're back to that person like I talked about earlier that running up a credit card. They don't even own the underwear they're wearing. We're in the same boat here as a country. And so you see what's happening now is this people in power want to keep their wealth and power, and they understand what's happening. So they're only doing the only thing they know how to do, which is, overthrow governments, threaten, bully, not look for win-win situations. And that's what the East is offering. I'm not saying that that's what they're going to get, or if it's a ruse, or it's going to be better if, the global East and global South rises and the US goes down. I'm not saying that. I'm just telling you what the trend is. Okay. I don't know if it'll be better, but you have a responsibility, if you're an investor, to look at things for the way they are, not the way you want them to be. I've told these stories 100 times. I see so many people that take their personal biases and they're investing. We all have biases, including me. That doesn't mean I'm preaching from on high, like I'm the total guru Yoda that has expunged myself of all biases and all my investment decisions have no bias. What I'm telling you is that, if you cannot see what's going on, how many people at the bottom of the S&P after the great financial crisis, when S&P was 666, as a matter of fact, and the Federal Reserve was pumping money into the economy left and right, cutting rates, refused to buy stocks because they didn't like Barack Obama. What's that got to do with anything? I'm in this to make money, not lose money. Okay, so this is what happens when you put your biases and your beliefs, okay, ahead of economic reality. And so German industry stares into the abyss, facing a prolonged energy crisis, which is self-inflicted, by the way. Many German firms face the unpleasant option of either shutting down or relocating elsewhere. Europe's manufacturing powerhouse is set to scrape by this winter thanks to gas reserves built up over the last 8 months, avoiding an energy blackout. Without relief in the form of cheaper power, the nightmare in 2023 and beyond could be a hollowing out of Germany's heavy industry. It's already happening. which not only underpins its export-led economy, but is also inextricably linked to thousands of suppliers in neighboring EU countries like the Czech Republic and Slovakia. For them and for the rest of the EU's economy, the consequences of deindustrialization in Europe's biggest economy could be catastrophic. It's a good view or idea that basically Europe will slide into deindustrialization. It'll become poorer over time, and it'll be this quaint little place. Well, this is the best case that you go to look at how things were, back in the day. Oh, go to some castles, tourist attractions. It'll be very cheap. And that's one way to look at it. And the wealthy in India and China will hire nannies and butlers from Europe to come work in their countries because that's where all the money's going to be. Okay. Or what's more than likely to happen is with all of the bad decisions that the Europeans have made over the last 25 or 30 years with unfettered immigration from third world countries, with the amount of debt they have, with their inability or unwillingness to have their populations be renewed. Their birth rates are declining, too many old people, too many promises made to people, pensions and retires. This whole thing's going to be a mess. And now you're taking the golden goose and wrapping your hands around it and strangling it. You tell me what the outcome's going to be. I don't see the EU surviving until the end of this decade if this continues. What needs to happen is immediate rapprochement with Russia, get the gas turned back on, get on your knees and beg for forgiveness, okay? And stay out of other people's businesses. For 15 years, you were told the EU. And so the EU is subjugated to the United States, okay? And they take their cues from them. Like I said in the last video, there's a good possibility, I don't know for a fact, I can't know, that the United States, along with the UK, maybe some other actors, blew up the Germans' gas pipeline from their major gas supplier, so that would inhibit any rapprochement. So what do you do? So, what's the plan here? Okay. So you have BASF, who's been in business for 150 years, is permanently, it's in the article, you can read it, permanently shutting down and moving and thinking about moving to other countries. Here's the last portion of this. When we look at the current energy crisis in 10 years or so, we might consider this time as the starting point for an accelerated deindustrialization in Germany, said Deutsche Bank economist Stefan Schneider. Yeah. So people ask me you have to be able to look at these things further than just a week or two ahead, right? And you see what's happening. The decisions are being made. And there's no recourse for the population. Look at the UK, for example. Who are you going to vote for? You got this Rishi Sunak in there. He just came out the other day. He was involved in the previous governments, okay, I think as the Chancellor of Exchange, and now he all of a sudden found a $50 billion hole in the budget he didn't know about, or 50 billion pound. So what are these talking about doing? Raising taxes, cutting benefits to people. And so where do you go? Where's Keir Starmer? Where's the Labour Party? Okay, where is the new blood or the new ideas? So you can't vote your way out of this. That's what I keep telling people. You're almost going to have a full implosion. But even if you have a full implosion of these economies, will you still be able to recover? Will there be an ability to change the government? What I think is going to happen is these people are becoming more restrictive of free speech, more restrictive of dissent, more oppressive, okay, to try to hold on to power. And eventually the thing's just going to spin out of control. And at some point, you're going to have a catastrophe there. They cannot pay these pensions. They cannot pay these commitments. And then you're out here trying to destroy this economy and all of the ancillary businesses that are in these other countries, which is the whole basis of the EU. Okay, so why stay in the EU if it's dragging you down? What you do, what I was taught in the Navy is when a ship goes down, once you enter the water and told to abandon ship, if you're not in a life raft, if you're swimming, get away from the ship, swim away from the ship. Why? Because when the ship sinks, it creates a vortex behind it and it pulls down everything around you. So you will be pulled down with the ship to a sufficient depth where you will drown. And that's about the best analogy that I can think of. Is this actionable? I don't think that, places like Germany and France, unless they change their way of doing things, unless there's radical change in politics and policies in these countries, okay, which I do not see on the near-term horizon, they're not investable, in my view. Now, there are some little things here and there. I have a bank in the portfolio that's in an EU country, but it's at the periphery. It's not in the EU, and I think it has some prospects. So, there may be some prospects, but to go and buy property or live in the EU, I don't think that that's a good prospect right now, unless they fundamentally change their politics and policies. So here's in Sweden, recent basically energy sources showing you like this is nuclear on this side, right? This is nuclear generation, and you see how it's basically pretty steady eddy. And then here on the other side is 6 hour over the same period of time, wind and solar. Okay, and so the intermittency, the chaos, the this is not how you run industrial, technologically advanced societies. This is how you do it over here. I just wanted to point this out. And like I said, I'm not going to have these arguments anymore. People can believe what they want to believe. This is not. This isn't workable long term. This is workable. This is why I'm so bullish on nuclear power, because people that are thinking people that are trying to put together real energy policies, this is why you see more and more discussion around expanding nuclear power. And yet, places in decline that are wedded to this belief about CO2 are, you got to remember something. It's not just this belief. It's not just like one faction of people. It's a lot of entrenched interests. Yes, there's true believer environmentalists, like these stoops that go and superglue themselves to lanes of the highway. That's one group. That's not the biggest one. Then you have nominal environmental people that just are not educated. They don't understand. Yes, they're for environmentalism, whatever that means, however they define it in their mind, but they're not willing to pay for it. Then you have people in the industry that's there, you're not going to change someone's mind if their living depends on them not changing their mind. We've talked about this. And then there's a whole, cohort of hundreds of thousands of lawyers and developers and people that are in the business, and then lobbyists that go along with it. There's so much money now in this sector that it's just not going to go away. Okay, it's just another one of these sectors that exists, and so you have the cumulative effect of all of this. It's not like some star chamber of 12 people that have decided we're going to do this. I mean, it's just, and so ask yourself in the West, if this is your policy, and the subsidies and the tax breaks and the SOPs for less efficiency and more chaotic power in a context of currencies that are in decline, like over indebtedness, is this going to be the priority, or is the priority going to be once we have these currency crises? Look what's happening with the currency in Japan and in the EU relative to the dollar. And remember, this is all relative. One shirt's just stinkier than the other one. Doesn't mean that the US dollar isn't stinky, but right now it's the cleanest shirt in the hamper. Suffice to say, this is the future on the left. This is I don't think this is the future on the right. So upon that, like Japan, for example, they always try to consider themselves part of the OECD and kind of sometimes go along with this stuff, but they have their own problems, right? They don't have the ability, they have no energy sources on the home islands. And so they almost are totally reliant on imports. And so here's what they've said, right? Because of the high prices of LNG and oil and gas and things like that, Japan will put the introduction of a carbon emission surcharge on hold, abandoning plans to include it in fiscal 2023 tax reform, as it seeks to avoid adding to the burden on companies and consumers already struggling with skyrocketing energy costs. Well, let me ask you the question, because what we have been told by the world, by the UN, by the all of these institutions, the masters of the universe, is that we only have 8 years. We're heading for disaster. blah, 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 all this nonsense, these lies, or not lies, but these false predictions that never come true. And yet here we have, in the end, when it comes down to it, if you want to stay in power, you have to acknowledge reality. Again, when physics meets politics, physics wins. The government and ruling party lawmakers will look elsewhere to finance the nation's transition to net zero greenhouse gas emissions for the time being. They're not going to do anything. They're going to turn on their nukes, keep turning their nukes on. That's what they're going to do. Okay. And so that's what a government should be doing, right? It should be looking to avoid, like it says in the article, avoid adding to the burden on companies and consumers already struggling. That's what the purpose of the government is, okay? Not to come out with more taxes, more dumb initiatives, more burdens to companies and people, okay? Over a trace gas. I'm sorry. That's a life-giving gas. I'm just not going to have this conversation. And in the end, this is what will end up happening if you want to stay in power. So I'm going to put a link to this paper. This is the last slide. There's a pretty good paper. It's really complex. I had to read it a couple times. I'm still reading it. But this is basically, why recycling lithium ion batteries will not save us. This idea that you have that people sometimes put out that are advocates for these things, they will tell you that it can become a circular economy. We can use the batteries for 8 to 10 years, and then we can take it out of the Tesla, and then it can be sent for recycling. All the materials can be recycled, and then they can, be turned into a new battery. And then it's like this, self-licking ice cream cone, right? It just never runs out. It's an everlasting gobstopper. Okay, well, Willy Wonka and the Chocolate Factory was fiction. And so when you actually get down, these are the different ways that they currently recycle or thinking about recycle. When you get into like how energy intensive, how physically dangerous and labor intensive this is, you have to dismantle the battery, plastics. I mean, fires can, read the paper. And then you're like getting all these treatments, and there's all these heatings if you want to use this one. It's very energy intensive. And so I got this off a Twitter feed, link to the paper. I'm not smart enough to go through it, and I don't have the time because it's just intuitively, you don't even need to like do this down to each BTU, but it's easier to mine the stuff, even though that's energy intensive. This is more energy intensive and dangerous and dirty. And so the everlasting gobstopper is not true. It's not going to happen. Maybe I should say never. I want to stop saying that, because you never know what will happen. Maybe new processes will come along. Let's just say currently it's not going to work. Okay. It's not going to be the panacea that some people are saying, that we can have this everlasting gobstopper or self-licking ice cream cone that just continues to, regenerate itself. And then we can, in our minds, solve the problem. Where do you get the energy for all of this preheating and all this smelting and all this stuff, all these processes? They're energy intensive. They're late, dismantling. You have to do it, by hand, or I guess they have machines that do it, and then some wag would say, well, they're already doing it, but are they doing it profitably? Okay. Can you extract enough material value and still make money doing it? Because if you can't do it, then it has to be subsidized. And how are overly indebted governments in the EU and the US going to spend billions of dollars recycling? I mean, this is going to be a big problem 5 to 10 years down the road with all of this waste we're going to have from all of this solar panels and wind farms and batteries. They're not going to know what to do with them. It's going to be a big nightmare. You can drive all over West Texas where they're right now, okay, and find laydown yards where they've repowered wind turbines. I've talked about that before, how they do that. And they don't know what to do with the blades. So they just have them piled up in laydown yards. They're just sitting there. Some of the places I've been for years, I've driven by the same yard for 5 or 6 years, and the same blades are still there. So something to keep in mind. If you're interested and you're a chemistry person, like I said, I'm never going to say never, but when I started reading this, I started thinking to myself, you're going to like set this up where? where are they going to let you put this recycling place with all of these off gases, all these acid treatments, all this stuff going on, smelting reduction? How do you get the, what's going to come out of the stack on the other side of this process? Who's going to let you build that anywhere? We already have the NIMBY and the banana situation. So I don't see it. I'm sorry. And then what do you think? You're just going to ship all this stuff to like India or Bangladesh and they're going to do it over there, like they do the ship breaking now? I'm not sure that that's going to work either. So we'll see. Like I said, never say never. Technology increases, processes increase, necessity sometimes pushes this. But currently, this is not like, oh, well, we'll just recycle it. Not a problem, John. Don't you get it? Yeah, well, what does that really mean in real life? That's, nobody contemplates that. It's the same thing with the mining to get the original materials. No one contemplates the fact, I talked about it last week. It was funny. I was on a Twitter feed where they were showing like that big mining haul truck or that front end loader and how much diesel it uses an hour. And inevitably what happened was some wag showed that Caterpillar had a demonstration excavator they were demonstrating in Europe that runs on, it has battery powered. But it was a demonstration. It was not in production. No one's using the darn thing. And when you're mining ore, copper, or nickel, whatever, this is 24/7, 365, guys. That doesn't stop, okay? Because you need the huge economy of scale. So how do you recharge the battery? What do you do during the downtime? Do you buy twice as many machines so you can, I mean, see, this is what you get from people. They want it to happen so bad. It's the right thing, John, I believe. So look, Caterpillar made a battery operated excavator. Okay. It's not in production. No one's using it on a job site that I've seen. I'm all over the place. I've never seen this battery powered excavator or equipment on any job site because we're working dawn to dusk. And we can't just, shut down for 6 hours to recharge the battery, presumably with what, a diesel generator? Because most of the places you're working don't have electricity out there. So this is what you end up with. A bunch of people that I think in many cases have their hearts in the right place, but they just do not know what they don't know. And so they vote for policies or they support policies that are actually a net negative because in their heart they want it to happen or they feel like it's the right thing, but they don't understand the actual mechanics of it. So that's my view. But again, that's heads we win, tails we win more. That's our opportunity. That's another one of our opportunities, right? Is to take advantage of that lack of knowledge and because they're going to try to do it anyways, regardless of what I say on this YouTube channel. All right, guys, that's it for this week. Hope you got something out of this. Appreciate the following. Again, if you're interested in these oil field services stocks, they're starting to move. We've got probably a half dozen of them in the portfolio. Most of them are doing fairly well. We've had one that's up over 100% already. There's more to come there. So consider a subscription to the Actionable Intelligence Alert newsletter. I think that we're crushing the S&P. We're crushing, the benchmarks. So, of course, future performance is not guaranteed. And our portfolio is volatile to the upside and the downside. So keep that in mind. All right, guys, thank you. And we'll talk to you next week.